So that way, for the folks that couldn't be here live, there we go. Perfect. Yeah, so I'll mention this, and this is kind of for everybody. And so some of the things that we identified in going through that first walk through the first half of the script with Oscar is there's a few different nuances that I felt like could be adjusted, improved, or just all out right, just missing in general, like that transition into the medical questions. Like I felt like the opening statement you had there, hey, just part of this process, I'm shopping all these 30 different carriers and we get some medical information. So that way it'll help me figure out which one's going to be the best fit for you. Like there's literally not even a close statement to that. And so I just want to mention for you and for the rest of the team, we're getting ready to transfer over to a new dialer away from Tixi over to Convoso. One of the really
nice
features of this new dialer, just an ancillary benefit, I call it, is that it has a dynamic script on there. And so you get onto the phone, it'll have the first question. It'll say, hey, are you shopping for yourself or for a loved one? And then you ask the question. Depending upon what they answer, you click yes, no, both, whatever it is, and that'll dynamically take you to the right portion of the script. So I just want to mention that. So
that's
for the
great.
people that are following the script in that PDF file and document, that'll still exist, especially for training purposes, reference intent. But moving forward, the dialer is going to have the script natively part of the dialer. So we'll make those little customizations and adjustments when we get the script moved over there. So just want to throw that in there for folks that are into that.
That's fantastic. Yeah, I think that's a that's a big tool. Again, especially for new people trying to get adjusted to what do I say now? Where do I take this conversation? That's a good tool. So great. Okay. All right. So let's get right into this thing. And yeah, I think, look, you always have the meat and potatoes of the script, right? The things that you have to ask, the questions that you have to go through. But anytime, again, that you can take the opportunity to make those pieces your own, to relate to the person on the other end of the phone, to give them an opportunity to open up more, which again is ultimately how you close someone, is by allowing them to talk and really explain and tell you what is that real need that they have, and I keep hammering down, and you'll hear me just talk about this stuff over and over again, because it applies to all sales, right? Like identifying the real need that person has and then building the urgency for them to take action on that need versus kicking it down the road for another month or 2 or 6 months, or just ultimately not doing it, right? And in this case, the ultimate price they pay is they die, right? They're dying and their family is now left with this bill. So there's a real pain point that you can tie to the need that the person has for insurance, right? In most cases, it's like, well, what's the need for buying a toaster, right? Or something simple like that. Like, you don't have those things when you're selling a product. You guys are in an opportunity where if that person does have the need, they're paying the ultimate price if they don't take action, right? And I think if you portray that in the conversation when you're speaking to them, you're going to see people shift, right? Because when it truly hits them that, like, man, I do need to take action because I could pass tomorrow and my family's screwed, right? They're left with these bills. When you're able to really make someone feel that, right? What happens that day when the person dies, when you die, and your family's kind of sitting around and now they're crushed. Now they're trying to figure out what the next move is here. And soon later, they're going to have to figure out financially where they're going to come out of pocket 15, 20 grand, And by the way, those are things I would say to people on the phone that I'm talking to, because that's truly what happens, right? And most of us have been through, death in family. Some of us, maybe even very close people, right? Like a father, a mother, a sibling. Like, man, those are moments where you're completely lost, right? And then to have to come up with money, and some people have financially the money to do that. But if you don't, man, that is just an additional piece that nobody wants to have added to them in a moment like that. And that's the message that you have to like get them to see or like understand, right? Because again, when they click on that and they tie it to their loved ones feeling that, no amount of money can fix that, right? Like, it doesn't, like, if money's not a question and how much do I want to leave for my family, there is no number, right? There is no number that I would want my family to have as much money and as much financial freedom is I can provide, there's no question, right? And so that's what, right? And I'll ask that question, right? And we'll get into where you would put that question. But the question is like, how much money would you like to, or is there any amount of money that you would want to leave for your family, right? And I think it's important because everybody wants to leave more, but then we have to come back to reality, right? Budget, how much can you afford? And that's why as a broker, you have a real advantage too, right? Because you're able to give someone, at the end of the day, in insurance, the product of insurance, the person that it does the best is the person that gets the most amount of coverage for every dollar that they spend every month, right? That's the goal in it, especially final expense. And so as a broker, you offer that. You have that tool and you have the ability to give people that, right? You're going to shop it for them in all the states that are available, in all the carriers that are available for them. And you're going to make sure that they get the most amount of money for every dollar that they spend every single month. And that's a powerful statement when you tell someone that, right? Because that's ultimately all they care about. Nothing else matters. What carrier it is, they don't care. Where it comes from, who sells it to them, they probably don't even care, right? At the end of the day, what they care about is what's the most amount of money that I can get my family for every dollar that I'm going to spend on this every month. So tying all those things together into the pain points is how it comes about. All right, so let me get into the pitch and where we kind of left off last week. Shopping price range. Okay. Yep, we talked about the payment methods. We went into the health questions. We talked about, having them grade themselves is a really good question, guys. Scale to 1 to 10, 1 being terrible, 10 being the best. Where would you rate your health? Really important question that I always throw in there. RX, shopping price range. We went through this last week. Okay, so I think we were kind of here. Now this is just okay. So let me share my screen. So all right, everybody see that? Thumbs up. Everyone sees that? We're good.
Yeah.
Yes, sir.
Cool.
Thank you.
Okay. Awesome. And correct me if I'm wrong, if we already went through some of this stuff, but I believe this is kind of where we were because we went through health questions and kind of ended here. Is everybody kind of on that? Yeah. Okay. That's what I thought. All right, perfect. So now at this point, the person has given you, right, the transition, right? The person has now gone through, you've asked these questions, they've said yes or no to whatever. Again, really good place to relate, right? Connect with that person on something tough, like a major medical condition that they've been dealing with. And again, for you guys, when you think about it, if you have a medical condition, if you don't, some of these conditions are every day they're dealing with it, right? A diabetic is, if they take insulin, they're pinching themselves every single day. And the moment when they found out that they had this medical condition, this large medical condition, that was a tough day, right? Cancers, just about anything, right? Like when I went to the doctor was like, hey, you have really high cholesterol, you need to like buckle down. I got nervous, right? Because I think about like getting a heart attack. Heart attacks run in my family. I think about my kids, like me dying. Those are all the things that go through my mind. So those are the things that you have to tap into because they went through the same thing, right? When they were told that they had Parkinson's, when they were told that they were, or when they went through drug abuse, just looking at these questions here, right? Cirrhosis, hepatitis, heart attacks. So these are really good moments for you to connect. Like it says there, show compassion, be empathetic, right? And then give them how that relates to what you're doing in that process, right? So example would be, hey, recent heart attack. And they say, yes, I had a heart attack 2 years ago. Gosh, I'm really sorry to hear that. I know how scary that must have been, right? You see, again, my tone slows down, my tone goes down. I change how my approach is. I sound caring, I sound empathetic. And so at that moment, you're connecting, right? You're relating to that person. And I always say that. I always say, I can imagine how scary that must have been and how scary for your family. And why I can see now how why this is important to you and getting this done and making sure that if God something does happen tomorrow, that your family's protected. So, right. So it's moments like that that I'm able to connect and then tie it into the need. Right. And I'm just taking this person down this conversation where I'm asking the questions that I need to ask. But in addition to that, I am closing the person, right? I'm little by little always assuming the sale, right? Like saying that I'm assuming that today we're going to get this done, right? And then we're going to choose something and you're going to be protecting your family. Because if that's the conversation, then they're getting ready to just, yes, right? They're getting ready to just continue that, choose whatever option or however we get down to pricing in a second. So connecting here and then, hey, thank you so much for answering these questions. Appreciate it. Look, so now we continue, right? So it says shopping price range. If we know the amount, right, which we talked about this, the amount that everyone I work with is on a fixed income. I actually think we did go through this. They have the program sorted in different ranges. So I need to tell you what range to shop in, right? So here, and we'll touch on this again, right? So this is a script that really gets to the meat and potatoes because this is what they want to hear, right? They again, how much money can I get for my family for every dollar that I spend? So this is what you want to give them, and getting into this now is if you've set up the call properly, if you've connected with this person here, if you're having a good conversation, and sometimes you're not. Sometimes you're connecting with people, but the conversation isn't like great, right? Because you're still kind of strangers, right? So that doesn't mean that that person won't buy from you, right? It's important to understand that sometimes you might not have like a great conversation, but if you're controlling it and you're taking the person where they need to be, then they're going to buy from you. It's not about like being friends. It's about can this person solve my need, right? With what they have. And if they're professional and doing this right, that person's going to buy from you. Okay. So here they have the program sorted in different ranges. So I need to tell you what range to start shopping in. We do not know their price. Now this is just so I know where to start shopping policies. So I should start shopping from the range, right? And we sticker shock them, right? So we did go through this last week or 2 weeks ago. They said they are price sensitive. I know you had some price concerns already. Okay. Okay. So, all right. So let me read these two parts, and we'll go through them just one more time because I think this is important. And I think we went through coverage amount here. Okay. So how much coverage are you looking to get? Here's the price. I just want to make sure we choose the. And okay, yeah. So this is definitely where we ended. Okay. So, um, they have the prices. They have the program sorted in different price ranges. So I need you to tell me what range to start shopping in. Okay. If they don't know their price. Now, this is just so I know where to stop shopping policies. Just for you, should I start shopping in the range of about $100 to $150 a month? Okay. So here you have to be very direct, right? You have to just come out and if you can't skip on this, kind of like what we talked about a week or two ago when we talked, or a couple sessions ago, we talked about like when you ask the Social Security, it has to be confident. You have to just spit it out, almost assume that they're looking for somewhere around $100 to $150. So now this is just so I know where to start. Know where to start shopping policies for you. Should we start somewhere in the range, right? And I might repeat myself. Should we start maybe like somewhere in the range of 100 to 150 a month? Does that be good for you? Right? Curiosity. I really want to know, and you want to make sure that this doesn't sound like a sales tactic, right? Like 'cause sometimes it does come off that way. So that's why they are really slowing down, asking it as a real like question. Hey, would this be good for you? Um, they're going to say yes or no. Most of these people are going to say no, right? Because most of them, their price range is under 100. And again, the point of this is to kind of sticker shock them and go, whoa, 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 no, no, no way. That's no good for you. That's the response you want from this. You want them to say that so that they're with you, right? They're with you, they're connected, and it's like, okay, no problem. Well, let's take a look. Let's find that range so that at the end of the day, you have this policy and plan active till the day you die, because that's all we're worried about here, Mr. Jones, right? We need to make sure that you can afford this plan today, tomorrow, 6 months from now, 5 years from now. It has to be something that you don't even think about. So finding the budget is extremely important. Understanding what is affordable to you is probably one of the most important things in this entire process. And that shifts the idea that you're just trying to get how much I want to spend out of me versus like, yeah, this is really important, right? This is a really important piece, because if you overspend here and you don't have someone like me telling you, right, explaining to you these things, there's an emotional connect, right? That again, like I said before, we want our children to get as much money as we can, the more the better, to the point that we would likely overextend ourselves on a monthly payment to do so, right? And so it's important that as an advisor, as an agent, that you explain that here, because that's going to, again, shift the mentality that that person might have, that this is just like a sales call, right? And so that's what I would that's how the approach that I would take on this is give the reason, right? Explain why you're trying to get a budget from them. So that's how I would explain here. And then you work your way down, right? You work your way down to wherever they're going to be comfortable. Once you know this, right? Because this is for them, people feel like this is like, wow, they're holding this back from me, right? Like this is some secret thing, but really not, right? Like it's a program based on what can you spend per month, right? Because the question is not how much money do you want to leave, it's how much money can you really afford to leave. And even though we want to leave $1 million to them, is it better to leave 20,000 than zero, right? And that's always like the way I propose it to people that object, right? And go, oh well, I'm going to wait, or this might be too much, or that's how I always explain it. Like, hey, you can take action here, and I know, well, because they're shopping, right? They're shopping for more. They think that they're going to be able to get more coverage somewhere else, right? And that's a combination of either I didn't do a good enough job explaining that I shop everything, right? I have access to everything in your area. You really don't need to go anywhere else. That's the service that we actually provide. So if I don't do that good enough, then that's part of why the person will feel like they might be able to go somewhere else and get a cheaper price or get more coverage. So for me, it's always important to just explain that to people and go through it as we're doing this. So now on the other side, if they say they are price sensitive, I know that you had some price concerns already. And this next question is just so I know where I should start shopping for you. Should I start shopping in the range of, right? So you're kind of taking a little bit of a different approach on that person. JD, you have your hand raised. Go ahead, buddy.
Yeah, brother, I just wanted to see if you could take a moment here at this part of the presentation to kind of discuss or address the like term, objection. It's like, I need $100,000 or I'm hanging up right now kind of people, to
Yeah.
potentially maybe sell them on the idea of I know the next part of the script here is the difference of term and whole life, but you're going to, at this part of it, like, there's a lot of people that jump into this call and just assume like, hey, I'm here for 100,000. I'm here for 500,000. If you can kind of discuss how you handle those sort of objections.
Yeah, absolutely. So the first thing is that, like, right, like what I just mentioned, when somebody says, well, I want 100,000, I want a 500,000, I acknowledge it. And right. So you don't want to bump heads in that moment. And it's important that when somebody has an objection, that you acknowledge the objection, and not but, right? And yes, there's no problem. Absolutely. And here's how that works, right? So the actual objection, or how I go into it, I immediately talk about, well, look, JD, there's really no number high enough that we'd like to leave for our family. And so what this comes down to is a couple of things. One, affordability, most important, right? And that's why we're going through this process right now of what can you afford? Because what's important here is that whatever amount it is, 100,000, a 500,000, right? I'll throw it back at them. Whatever that number is, you have to be able to afford it, right? And that's what this comes down to. And in some cases, JD, I have clients that After going through the process, they realize that, gosh, maybe 100,000 is not a number that I can actually leave for my family, but it's better to leave something than leave nothing. And I take them back to the moment, because remember, JD, that the day that you pass and your family has to figure out how much money they actually have to come out of pocket with, leaving them 15, 20,000 versus leaving them nothing is a game changer, right? In that moment, they're going to go, wow, dad left us this, mom left us this. Like, we don't have to come up with this piece. And it might be enough to cover everything that we're trying to do. So my goal today is to make sure that if you can afford to get a $500,000 and it's within your budget, gosh, let's do it. But what's important is the affordability factor and finding it out. Now, when you see that there's advertisements or information out there that says, oh yeah, 100,000, get a $500,000, typically those are talking about term life insurance. And then that's when we get into, and I think that goes in next year, right? And that's when I would explain, like, do you know the difference? Have you heard of term versus whole life insurance? And most of them are going to say, most people actually say no, no, I don't know what the difference is here, or what's that, or what's this. And then I just go right into it. Especially if I'm talking to a final expense person, I'll really will say, like, well, term is a product that's really used for younger individuals as they're starting their family off and they need something affordable. And in the event that they die of an accident, something out of nowhere happens and they need to cover their mortgage, they need to cover things of that nature, term life insurance works well for them because it's just as the name says, it's term. It's going to end in 10 years and 20 years. For you, who's an older individual, we're going to look at really whole life insurance, because right now you got to make sure that this policy stays with you until the very last day that you're here. Is that 5 years? Is that 10 years? Is that 15? Gosh, I hope it's 30, JD. Right? But what we need to make sure is that that's not a question. You can't wonder if you're going to outlive your life insurance at this point in your life. When you're young, you have different options. You're just growing, you're just starting. But right now, you're at a stage in your life where certainty becomes probably the most valuable thing. Would you agree? And I put it back on them, right? And that's going to completely take them away. Yeah, for sure. But I still want 100,000, right? So now we still have to do the work of the qualifications and all that. So let's go through, because I want to read actually what's on the script here. And then I'll give you my emphasis. But the biggest thing is explaining and connecting to them that the number at the end is completely based on them, right? And that you're just here to walk them through all the options that they have. And as a broker, you have all the options for them. So that's the process that you're going through with them. And I'm telling you, people will let down the guard and the wall there, because again, it takes away, and again, you have to deliver it right, but it takes away that person feeling like they can get a better deal somewhere else, right? Okay, so okay, JD, so here's the price. I just want to make sure that we choose the right product for you. Now, do you know the difference between term and whole life? Right, so term terminates, whole life is your whole life. So your coverage never cancels and monthly payment never goes up with this product. Does that sound good? Right. So again, this is another version of it, right? Like, I just said it in a longer. I like kind of explaining these important pieces a little bit more to people, because they get it, right? And they go, okay, yeah, sure. That's the reason why I wouldn't want, like, why wouldn't I want term, right? Because that would be my question as a borrower or as a buyer. Like, why don't I want term? Yeah, maybe I do want term. If I'm not educated enough in the product, I'm just going to assume that, yeah, I want term because it's a higher amount and it's cheaper, right? So those are the things that we have working against us, right? So how do I overcome that? Well, you overcome it by really explaining the product a little bit more, right? Emphasizing who the product is actually for and how they can easily kind of be mixed in together. But that at the end of the day, that's why final expense insurance exists, right? Because it has to be something that's fixed for life. It has to be something that is not going to change. It has to be something that is not going to end. It's going to be with them until the day they die, because at that age, certainty is what's important, right? That's why when you think about like, and I'll say this to people, it's the same reason why when we retire and we have, retirement and 401ks, that money goes to capital preservation, right? We're not investing in aggressive things anymore. You're you're looking for certainty in the years ahead. And so that's what final expense provides for us. That's what whole life provides for us. It provides certainty. And the only thing we need to do, JD, is right now basically find the affordable factor of it, because once it's affordable, then we know it's never going away. And that's our end goal, is to protect family until the last day you're here. Would you agree with that? Right. And so conversation is we're not, what is term, forget it. You'll have people go, yeah, no, I don't want that. Right. Which is the ideal reaction that you want from someone, that you explain it, right? That you understand the two products enough that you can explain it and regurgitate it, kind of like how I just did, and in a simple way, so that the person goes, oh yeah, no, I don't, that's not what I want. Right. I don't care about 100,000. I care that my family gets whatever I can afford to give them until the last day I'm here. Right. So that's, so really, if you don't know the two really well, read up on it, right? Like, be confident in explaining those things, because these are the pieces that are really important. Like JD mentioned, like this is a question that comes up, right? Because they're seeing all these advertisements, they're seeing all these different options out there. So these are the portions in that conversation where you do have to sound confident. You have to make it simple for them to like digest, right? And then relate it to the closing, right? That's why we're doing it this way. That's why we're looking at whole life. I have term to offer you, but that's not a product that I would ever put my own mother, my own family member in at the age that you're at. Does that make sense? Right? I'll stop. Does that make sense? Yes. Great. Now you've acknowledged that term is out of the question. Let's continue with what we need to do, which is get you covered. Questions? Does that sound right to everybody? Yeah. Okay. It's really just like, again, relating, like being sympathetic, relating to them, giving them enough information that they can understand where you're taking them, but not too much that you overwhelm them and they go, oh, it's too much stuff, I can't buy, right? Because that's what happens. If you overwhelm them with too much information, then the wall goes up, and I'm not gonna buy anything because I don't understand it. And they're not gonna tell you that, right? Because nobody's gonna say, hey, I sound stupid, but I don't know what you're talking about, right? Or you're giving me too much information. What you'll start getting is people that'll go, yeah, yeah, okay, yeah. If that's the back and forth that's going on in the sale, you've lost the person, right? The person is just yesing you, right? So remember those cues. And remember, I always say the sale is on the other end of the phone, right? You have to listen and hear at all times, because it is easy to go off and talk about a million things and you've lost them, right? And you don't even realize it. And now you've been talking for 5 or 10 minutes and they're gone. They're just trying to get off the phone with you. Right. So make sure that you're listening, paying attention, and that you give them enough information, but not too much to overwhelm.
Yeah, Oscar, I was going to throw in a little 2 cents on this part of it too. This is kind of like, because I'm just imagining how this conversation is going to happen when you get to this point. So you're looking at prices, looking at numbers, and maybe you're like, yeah, it looks like whatever it may be, whatever the quoting numbers end up being. Like, wait a second, like I was like wanting like 100,000 or 200,000. Like, how much do you guys go up to? And I'm typically respond with like, oh, okay, yeah, I completely understand. So, if you're looking at those size policies and that price in that coverage range, you're probably looking at a product called term insurance. Are you familiar with term? And regardless of whatever the answer is, like, okay, so in other words, term means that it terminates. And so the reason why, if you're even able to qualify for that product, but the reason why they're able to offer you that much coverage for such a little price is because typically those products never pay out, like the honest truth, because one or two things will end up happening to you, Mildred, is that either number one, again, being that it's a term product, eventually the product will expire or you will outlive it. And therefore you paid all your money into it for whatever number of years it is, only to outlive it and no longer be covered by that product, right? Or the other option that I see happening is that they reach the end of that term period and then they go to sign back up or renew that product. And it ends up being way too expensive because they're 10 years older, 20 years older from whatever they were when they signed up. And so now it's super expensive. And again, now they're left in a position where they have no coverage. And that's the reason why they're able to offer that amount of coverage for those prices monthly, is because I don't remember the exact number, but the last time I checked, I think it's around 92% of the time, term policies never pay out. In contrast to that, to the ones that I recommend for folks, as a whole life product, which is exactly what it sounds like. It's with you for your whole life. So regardless of how old you get, or if you, heaven forbid, you have some stroke or cancer, something that hits you tomorrow, your coverage will never cancel, and the price that you paid is guaranteed for the rest of your life. And so I just kind of use that approach. The other part that I'll include in there, if we kind of go down a little bit further, is that I never tell people that I think that term is a bad idea. However, I think that whole life is always the right option, and then term may or may not be the right option. So term, really the reason why you have those large sums is typically because you got one or two scenarios. Number one, you've got dependents that are still dependent upon your income. So you got young kids at home. Or number two, you've got a mortgage or something that you need to continue to pay for after your passing. And so most of the people that we talk to are, the age 50, 60, 70, 80 years old. They usually don't have dependents at home. They usually have had their home paid off, or they're on low income and they're renting an apartment or something of that nature. And so typically they'll rule themselves out, like, oh, well, I don't fit in either one of those categories, so I don't need term, right? Because term is to solve those problems, whereas whole life, again, your burial coverage, is your cremation cost coverage, is your funeral coverage, which again, the policy will be with you for entire life. It'll never cancel. As soon as the sun comes up every morning, your policy will never change. It'll always be there when you need it. So, I implore you to continue to shop for term if that's something you feel like fits your needs. But just keep in mind that those policies are a lot harder to qualify. Typically, once you reach the age 50 or 60 years old, you basically can't even get qualified for those coverages any longer, because they're intended for those younger people that have dependents or mortgages. And that's why whole life is the right fit for everybody, because we're all going to die right one day, and it's all going to generate a bill. It costs you money to die these days, and that's exactly what this policy would do. And by the way, whenever you die, this benefit doesn't actually go to the funeral home. It actually goes to your beneficiary. Therefore, whatever your funeral cost is, if it costs $2,500 to cremate you and you had a $20,000 policy, the remainder of that portion will be left to your beneficiary to spend however they so choose. So you're still leaving an additional benefit behind for those loved ones as well. And then I'll continue to the next part of the script. Is that part making sense for everybody? I guess this is a different way to think about it or approach it, but that's kind of how I have that conversation.
Perfect. Yeah, I think, look, there's so many different ways. And so, the key is to take all this stuff and apply it, because there's a bunch of different ways that you can really overcome these objections that are coming, and just know that they're coming, and know that if you're newer, you're going to fumble across some of these, and you're going to get better as you hear it again, and that you spit it out again and again and again. It's just taking the repetitions, and then ultimately you'll start finding what really works well for you, right? You'll start finding how you say it that delivers it and keeps the person in line with the process. Okay. So so your level coverage explanation. Right. So I guess here it's basically assuming, like, at this point, because you've asked the questions, if they're saying that they don't have a lot of, medical issues, they seem like they're in decent shape, and this is what you're going through. So let me read this. So, okay. All right, JD. So after I do this application for you, you should qualify for level 1 day coverage. That means there's absolutely zero waiting times, no 2-year waits. from the date your first payment, you are 100% fully covered for the whole amount. I'll tell you the amount here in just a second. This is easy, guys, right? So you're just going through it again. Tonality is just important in these sections, that you're really delivering like absolutely zero, no waiting periods. Emphasize those things. Slow down when you're going through that stuff. GI. So after I do this application for you, JD, you should qualify for one of our most popular plans. If you die in the first 2 years, your family gets all of the money you're paying back plus 10%. So it's like the best savings account you'll ever have. Really, at the final day of the 2 years, they get the full coverage amount. If you die for any reason, it's really a blessing to have this kind of coverage when you've had cancer in the last 3 years, when you have, whatever it might be. So in this script, you're really heading them head first into this. And again, makes sense, because what you're trying to do here is like, you want to overcome objections now, right? You don't want to have to wait until you've gone through the whole process and then you say, hey, congratulations, you're approved for a 2-year wait. And then it's like, well, wait, what are you talking about, right? So this is the transition into now telling them basically what's available and likely what they might get. Again, you'll get here, especially in the GI, especially the new folks here, you're gonna get pushback more than likely, and likely some of you already have. Are a lot of you finding, when you go through this GI 2-year explanation part, what are most common reactions or responses? Can some of you share, like right now, what do people say to you when you say the GI 2-year explanation?
I had someone yesterday say that she flat out, I guess she had already gotten a quote and she's like, I didn't want GI 2-year. I don't want that.
Right.
Like
Yeah.
flat out
Okay.
said that's not what she wanted. So, and that's
Right.
the
So
only
she's
one
been
that she got pre-approved for that actually came up in the toolkits. It was AIG and it was a GI 2-year. So I was
yeah
like, I'm
yeah
sorry.
yeah. That's all we got. And so, what was
Mhm.
your response? What did you hit her with? Not to put you on the
I
spot, sorry.
yeah. I didn't really have a response because
Right.
that was all that came up for her, and,
Right.
I did just kind of go over the script again, and I was like, it's the best savings account that you can get right now, and your family gets." I just kind of reiterated everything that I saw in the script, and she was not buying it. So,
Yeah. And some
and
people won't. Right.
unfortunately, I couldn't go around it, like, cause that's literally all that came up. Everything else was declined for her, so I
Right.
don't know.
And that stuff is going to happen, right? Where it's like,
Mhm.
was that the first time somebody like hit you with that?
Yes,
Probably.
yes, that was
Okay.
yesterday.
Yeah.
Yes.
So you're gonna now have a better response, because we'll go through a couple of them here. And again, there's always going to be these situations, especially the new people. You're always going to get hit for the first month or two. You're going to get hit with things that you've never heard before, and you're going to get stunned, right? And it's tough to have a response in that moment, in that very second, and keep the conversation going, and without having the tools, right? Like, what do I say there? So just again, give yourself the time to know that you're going to learn this stuff, and that same question, the next time it comes up, you're going to have a very different approach and feel to it, right? So what I say here, this is a very direct statement that you're giving someone. So for me, like, you're almost looking for someone to say that to you, like, right? That's what I'm preparing for, because that's just, you're kind of hitting them in the face with like, hey, by the way, here's what's happening, right? So if you're going to do this, then you certainly have to be ready to to respond to it properly, and guide them. So let me read it out loud, right? So after I do this application for you, you should qualify for one of our most popular plans. If you die in the first 2 years, family gets all your money back, plus typically about 10%. So it's kind of like the best savings account that you've ever had. And at the final day of the 2 years, they get the full coverage amount if you die for any reason. It's really a blessing to have this kind of coverage, especially since you've had, cancer in the last 2 years. Which, by the way, so this is how I wouldn't let them, like, I would add to this right? Because I need to soften the blow, right? I need to like, hey, you're gonna get a 2-year wait, but here's why, right? I need to like that's where I would go with this thing here. Here's why quickly, right? So just to recap, which is what it says, health concern here. But if you leave it at just, you know, the last sentence, it's really a blessing to have this kind of coverage when you have diabetes. Move on. You know what I mean? Like you're not reminding them, right? A stronger thing here would be to remind them of what they have and why the reasons that we're looking at this type of plan. So I would maybe say, again, whatever it is, diabetes, cancer, or stroke, whatever they had, right? So I'm going to read the last statement. It's really, and by the way, JD, it's really a blessing to have this kind of coverage, especially since you've been diagnosed with, you had a heart attack 2 years ago. So just to kind of reiterate and go over that a little bit, obviously heart attacks, one of the leading causes of death in the country. So remember that insurance is really based on risk, right? And the carriers need to analyze, and based on where you land there is the products that you'll have access to. Now, here's what I can tell you. As a broker, having access to, again, 25, 20, and I'll count it out, I'll do it again, right? Having access to, looks like, again, about 26 carriers offering this product for you or these products for you in your state. These are the top, and we'll go through, I have a few options for you, but a guaranteed issue product is the product that you fall under just because, again, you had a heart attack 2 years ago. And so the carrier is always going to look at your medical history and based on that, determine what type of coverage you're able to get. Now, I always talk about things like how much coverage are you going to leave your family? And we've talked about that today. So when we look at the option of, do I leave my family something so that the day that I die, they're going to get at least every dollar that I've put into this thing, if it's within 2 years, JD, they're going to get every dollar back plus an interest, right? So that's why I mentioned a bank account, because it truly is like a savings account. Or do I continue looking for something? And again, we're looking at the 26, 27 carriers in your area. And this is the plan that they're all offering you. Now, you have a bunch of different ones to choose from here, but this is the plan that you qualify because all these carriers are assessing risk to the same one, right? Think about this for a second, JD. A carrier, let's say Mutual of Omaha or ABC Carrier, they're not going to offer more than the other, right? They all have to say and be around the same areas. They're all going to assess your risk in the same manner. So that's where we are right now. And being able to even offer something to your family after having a heart attack in the last 2 years or after having diabetes, which is one of the leading causes of death in the country, actually a really, really good option. Now, remember this, that after those 2 years, and by the way, this is a tough question, but do you think you'll pass in the next 2 years? Right? I'm hitting them right with it, right? Because most people are going to say, well, no, of course not. Then this isn't even an issue, right? Then this isn't even something that's going to come up. But know that, God forbid, if it does, your family is still going to get every dollar that you've put in. And I think I said this to you before, but that day when your family has to come up with the money, they're going to take anything over nothing. And the last thing you want is not to act on what's truly available for you right now, JD, because maybe you have a thought that there could be something better or that you could get something else. Look, whether you do business with me here today or not, that's okay. But I want you to know that this is the best product that's available for you at this time because of the heart attack that you had. Does that make sense? Right? And so I'm smacking them in the face with what's wrong with them, and we're going to break it down, because if you don't, they are just assuming that there's something better out there, right? They're just going to always believe Of course, I'm going to be able to get. I don't want that, right? And that's what that lady said to you. I don't want GI. That's because every person that she's talked to about GI didn't take the time to properly explain to this person that, great, like I want $1 million too, right? But and I get it, right? Is that accessible to me? And so you're the person that's actually speaking truth to them, and doesn't want them to see go around from quote to quote, and God forbid you have another heart attack and you die, and now you've left zero for your family, which is the last thing you want to do. Because after having this conversation with you and talking about Sally, your daughter, and Billy, your son, I know that what's most important for you is to make sure that they have something the day that you die. Would you agree? Right. And I end the statement with that every time. JD, I know you want to chime in on here.
Yeah, I appreciate that. And I agree with you 100%. And Oscar, by the way, I do have a hard stop at the end of the hour. I got another call I got to get to. If you want to carry on, you're welcome to, but I got to bounce. But here's how I address the GI, which is not actually included in the script. And I feel like this is kind of one of those little minor tweaks that we can make to improve this and make it even better. So the way that I discuss GI looks like this. All right. So after this application for you, if you die the first 2 years, your family gets all the money plus the 10%. So what I tell them is this. I go, listen, this policy, if you die after 2 years, you're 100% covered for the full face amount. If you die within the first 2 years from an accident, 100% covered for the full face amount. The only time that it would be your return of your premium plus that interest is if you were to die by natural causes within the next 2 years. Does that make sense, Mildred? And by the way, you weren't planning on dying in the next 2 years anyway, were you? And I kind of use it as like a joke, right? And so listen, I understand your concern. It's the 2 year waiting period, but if you die by accident, fully covered. Also, I make the joke, hey, you weren't planning on dying by within the next 2 years either way, right? So they just remind themselves like, oh, well, I don't think I'm going to die in 2 years anyways, right? So it's not that big of a deal, in other words, is what you're trying to convince them of. The other specific part that I include in this part of the conversation, which we covered when we talked about carriers, is that AIG is the only carrier in the country that offers a paid in full option, meaning by the age of 90 or younger, depending upon the age when they apply for the coverage, their payments will stop on or before the age of 90. There is no other policy in the final expense, whole life, guaranteed issue product line that offers or allows them to have a paid off, meaning after you reach that certain age, and once we get the application, I'll tell you exactly what that age is, you never have to make another payment again. This is a very unique policy, and my clients absolutely love the fact that they know that once they reach the age of 90 or potentially younger, that the last thing that they'll have to worry about is continuing to pay their final expense premium every month, right? Doesn't that sound good? And so that's a secondary way that I like to sell, specifically when dealing with AIG.
Yeah, I think the point here, guys, I think what's important is that you need to add a little bit more to this, right? Like if you're dealing with a GI person, you need to be prepared that they're going to push back, because again, that's what you want here, right? That's why you're asking this question. That's why you're making this statement, because you want the reaction so that you can overcome it right now and move on. Because here, this is a hard stop, right? Like if you can't overcome that portion there, it's not becoming a deal, and you move on. You don't waste any more time. You're on to the next person to get, which again, sometimes that's going to happen. You're not going to get everybody. Some people, doesn't matter what you say to them, they're going to believe in their mind that they can go get something better, right? So you try your best. You're going to get better every time that you try, but ultimately some people are just not going to buy, right? So remember that also. Questions on either one of those two that we kind, the version that I gave and then the version that JD gave, would those be kind of useful for you guys?
Yes.
Okay. And you'll find your way of saying it, right? Again, as you find your way, you're going to say it in your own version. But the more you understand the products, like what is GI, right? We know that it's because somebody who's sick has to get it. But the more you understand just like if the client, the better they comprehend what they're getting, the easier it is for them to digest and then continue. The same thing is true for you guys. So the more you can really understand why GI, why is GI a product, right? Well, it's based on risk assessment, right? It's across the board. They're all underwriting. Every carrier is underwriting the same exact way, because a carrier is not going to put themselves out there too far where they're going to get a bunch of claims, right? And then have a major increase in claims, which is it drops in their profitability, right? So that's the point of GI products, and they're based on risk assessment, right? They're looking at a person, okay, you had this, and this. So the better you guys understand that, the better you can regurgitate and explain why and why that person has to have that product, but how really not that big of a deal it is, right? Where it's like, yeah, you're not going to die in 2 years. So perfect. And if you do, you have a safety net, right? So you just get comfortable with that part. Okay, guys. So that's really the what we have to cover today. And then I think we're on in another week or two. So we'll continue kind of chopping this thing down. And again, as always, if you guys have any questions or anything like that, send them to me, send them to JD. You can follow, I'm always posting stuff on Scale My Socials. You can follow me on any social media channel, guys. So awesome being here again. Appreciate you guys.
Thank you, Oscar. We'll see you next time, my friend. I appreciate you.
Thank you, buddy. Bye.